Hey everybody, it's Sunday the 23rd. We're taking a look at the S&P 500 as we get ready to trade the final week of Q2 2019, June week 4. So we just had monthly OPEX, and we had the Fed this past week. We made a couple of days in a row with a new all-time high. We resolved, a high that had been set in ES that was never seen in the in the regular trading hours, and we had an incident like that in not only in September 2018, but back here in May of this year, and that went on and was left unresolved, for quite a bit of time. Both of those were, but we took care of this one within a couple of days. So right now we are just, anything can happen here if we are going to head up higher. We have our 80 handle rule. We have those sets of targets that I gave you because we're just shooting into the blue sky now. So you got to use percentages. You've got to figure out what was a really great pivoting area, and maybe they're going to take that and double a move from one point to that point. Those are the things that I use to try and determine new targets. But right now, I think what's more important is to focus on what could happen if we're going to pull back now, because we have really a perfect scenario where there's nothing stopping us. There isn't any unresolved higher level in ES that we have hanging over our heads. We saw some really indiscriminate selling at the end of the day on Friday and turned a day of an all-time high into a really ugly day at the end, closing all the way down at 29.50 after making an all-time high at 29.64. We did not make a new all-time closing high. This was a strong clue to us both in September 2018 and again in May of 2019, when we made the all-time high and did not come back around to make a new closing high that day. So that's what happened on Friday. So this gives us a pretty strong signal that we're going to be pulling back. Okay, so let's focus on what's going to happen if we're going to pull back. First area of support comes in here at the old all-time closing high left over from May, actually from April 30th, I should say, because the all-time high printed on May 1st, whereas the all-time closing high was on April 30th back here. But the area from that April all-time closing high to the 29.37 level, which was clearly some sort of like a wall of resistance, support resistance that was going on back here. You can see here on the 23rd of April, we came up to it, resisted it. The 24th, sold off the 25th, came in on the following day and took a look above it and closed above it, and then started to work our way up into an all-time high. But when we hit our all-time high and had that huge sell-off that day, that was the day of the May Fed meeting, you can see that this 29.37 level sort of split the daily candle in half. And it did so again on this bounce day where we tried to overcome the negativity and make a new all-time high, but failed. And also, actually, was this closed? Yeah, this was our confirmation that we were selling off, because we came up here, we failed to make a new all-time high, but we also failed the all-time closing high from April 30th. So that was confirmation of the whole topping process there. And then you can see once again this 29.37 level split the daily candle in half. And the next day, the high came up here to 29.37 again and couldn't make it through. So there's something going on with this 29.37 level. There really wasn't much, hemming and hawing about it here coming up into this all-time high that we just set this week. But I would like to keep an eye on this level and see if it becomes an area of support and resistance on our way back down. Maybe it'll be able to mark a halfway back point for us. Maybe we're going to come down here and then double down on the break of it, something like that. Maybe we're going to bounce around and hold this on a closing basis for a couple of days. We'll see, but let's keep an eye firsthand on this area here from 29.45 to 29.37. If that goes down, we do still have a gap left unfilled here to the Fed close on Wednesday at 29.2646. This low that we came down to on Thursday, this low tapped and took a tiny little look below the high that we had made on Wednesday. Some schools teach you that that is a gap fill. It's never a gap fill. And the fact that we're going to come down here and probably trade down in here and maybe even hold for a day or two is proof. It will be proof to you that gap was not filled, and that we came back to take care of that. we have this 10-day simple moving average that's moving up pretty quick. So if we spend a couple of days up here messing around, this 10-day simple moving average is going to come up here and it's going to offer sort of a magnetic force for price to come and pull down too. And ultimately, if we break the 10-day simple moving average, that sort of just sets off a chain of events that we're probably going to keep on walking our way down and testing more and more SMAs. So there's plenty of notes on here. There's plenty of gaps and things for you to look for. But ultimately, the halfway back for the quarter now, unless we take out and make a new high above 29.64.15, our halfway back for the quarter is 28.48, 28.48.46 to be exact. That's basically that's the halfway back for June, because June has set the entire range for the quarter as well. So ultimately, a 50% retracement makes a lot of sense. It would take us down through the 10-day, through the 50-day, through the 20-day, and ultimately it would probably be a test of the 100-day simple moving average if it takes a couple of days for it to happen. That's going to be about 120 points or so of downside that we would see. So that's a pretty good pretty deep pullback, and I bet there would be a lot of buyers in this area in here to turn things around. Let's keep in mind too that as we get into this week, we have a big set of data that's coming out on Wednesday with the durable goods orders in the pre-market. If we have like a pivotal day on Wednesday, it might come out of a reaction to that data point in the pre-market. If it's like perfect and it's not and it misses just a little but not too badly, maybe that's sort of a Goldilocks scenario where we could still count on a rate cut from the Fed, but at the same time, it's not so bad that the tariffs are killing us right now. Because as the week goes on and we finish up the quarter, we're working towards the G20 meeting that happens over next weekend. Since it's the end of the quarter and there's 2 days to settlement, that means that all trades that happen through Wednesday will still settle in Q2, but then Thursday and Friday are going to be, technically they're going to be settling in Q3. So any kind of things that they want to paint for the charts, they will usually do on that Thursday and Friday, because the trades are going to be settled in Q3. It doesn't really matter about their books. They're just trying to set up the chart. One other thing I wanted to do before I finish up this video is just, I was just showing you the roadmap chart. This other chart that I post a lot is I call the simplified daily chart. This is the exact same chart as the roadmap, but with all the detail taken out of it. And this is a good chart for people that maybe are trading just directional options and just looking for big targets. And they aren't really so concerned with spreading, or they aren't really so concerned with if you have a trading plan as it is, that you have an X amount of risk that you're willing to take, and you always follow your rules and take your options off if they are, if they've made this much money for you, or if you've taken this much loss. Then this is a good chart for you because this one just focuses on the simple moving averages and the gaps. So you're not going to get the extreme detail and understanding of what's going on in the market right now that you would off of the roadmap, but you will get some more strict and to the point. And if you're just checking in fast and on the fly and you just want to know where things are at, this is going to be a better chart for you to look at, because you'll be able to instantly read where the simple moving averages are and where the gaps are and where the halfway backs are. And as I've shown you time and time again, those are really the key levels when we start to sell off. Order flow comes from these levels. It comes from simple moving averages, average closing prices. It comes from halfway back points. It comes from opens and closes, which are what the gaps revolve around. So anyway, and low of day, previous low of day, and so on and so forth. So this is going to be a more simplified version of the chart for you to look at. Anyway, have a great rest of your Sunday. I'll see you later on when futures open.